Meet Kevin's stock portfolio. We're going to break it down here today. I'm going to show you all the positions Meet Kevin has on here and kind of give my 2 cents on if I like the stocks, if I don't like the stocks. There's definitely some things in his portfolio I really like. There's some things that I kind of don't agree with, and so we'll speak about all that in this video. By the way, if you enjoy a video like this, let me know in the comments if you ever want me to do other people's portfolios. It doesn't have to obviously be YouTubers. Obviously, Meet Kevin's a juggernaut in the finance space on YouTube, right? So I know a lot of people are kind of interested in that. But like, you know, if you ever want me to break down like Warren Buffett's portfolio or like Carl Icahn or any hedge fund managers or whatnot, let me know if you're ever interested in something like that. I can definitely break down their portfolios, kind of give my 2 cents on how they're positioned, go through the stocks and stuff like that. I'm always willing to do that sort of stuff on the reaction channel. I think this is just a good channel to kind of fit some of that content in every once in a while. I think it's good to kind of learn from, especially for people that are maybe just kind of building up your portfolios and trying to figure out positioning and those sorts of things. So yeah, I hope you guys get a lot of value out of today's video. I appreciate you joining me. 24,600 plus subscribers on this channel now. New record after new record. I appreciate every single person that's subscribed here. Thanks for being here. And also congrats to Andy Allen for being the winner in the Patreon squad to win a free membership into the private stock group and my private wealth group. So congrats to him. If you aren't part of the Patreon squad, get your butt in there. I got moves coming in there in the next in the next 48 hours. I'll be making moves in there. You get to see all the moves I'm making in the Patreon portfolio and whatnot. There will be pinned comment down there. Alrighty guys, let's get into this. So first off here, these are the stocks that Meet Kevin has under 5% of his money in, essentially, okay? Now, for a lot of these, I don't have a super strong opinion on, except for one particular stock here, okay? He's positioned, obviously, Autodesk there, Etsy. Etsy is just a good platform that I think is going to continue to grow quite substantially over this next 5 to 10 years. I like that positioning. We'll come back to Intel in just a moment. Solar Edge Technologies, Generac, ASML, you know, those I don't have a very strong opinion on. Those are kind of like okays, but Intel. Let's talk about Intel, okay? I think it's important when we have to speak about here, because the thing with Intel is, especially in relation to, Meet Kevin's, product here, it's his whole thing here is pitched around obviously pricing power, right? And I definitely feel like there's a lot of his stocks in this portfolio definitely fit his criteria. They have pricing power. They have true pricing power. But I've got to say, when I look at Intel, I'm not so convinced of the pricing power. I think it could be an interesting potential turnaround candidate over the next few years. But in terms of putting them into a portfolio that's all around pricing power, I'm just not so convinced of that, to be quite frank, okay? I mean, you pull up a 10-year of Intel. This is a 10-year chart of Intel, right? The stock's up 18%. I don't know if that really speaks to pricing power, especially in this industry and how many companies have boomed in this industry over the last decade. To see a company like this, I just don't think that really fits the whole pricing power criteria, right? You pull up the past 10 years of them versus AMD, them versus NVIDIA, right? And you really begin to understand who actually has pricing power and who doesn't have pricing power, right? NVIDIA stock, 6,500% gain over the past decade. AMD, over a 2,000% gain over the past decade, right? Now, just because you have past results doesn't mean future results, right? So just because these have performed like that over the past decade doesn't mean they're going to perform like that over this next decade. But it just kind of goes to show you about the lack, in my opinion, of pricing power Intel really has in the poor quality they've done with their business in letting AMD and NVIDIA become, honestly, more respected giants than Intel's ever been. And that's saying something there. So, that one I kind of might push back on a little bit in regards to that one, okay? Now things start getting more interesting. So now we're looking at his positions here that are less than 10% of the portfolio, but they're more than 5% of the portfolio, okay? Now, definitely some good companies in here. Taiwan Semiconductor, they're just a giant. They're a stable giant. Are they going to put up amazing numbers necessarily? No. Like some shocking growth rates? No. Is the semiconductor space in a tougher spot, at least short term? Yes. So that's kind of hurting, obviously, Taiwan Semiconductor stock price in the short term here. But at the end of the day, they remain a giant. They got a huge, massive facility opening up in Arizona that's probably about 10 to 15 minutes away from my Arizona house, which is very exciting, right? The main issue I see with this group of stocks here, his more than 5% but under 10% squad, is valuations when it comes to a lot of these stocks, okay, are definitely getting pushed. You look at something like an NVIDIA, I mean, this stock's pushing forward P50 plus now at this point in time. A good way to think about NVIDIA is whenever you can get the stock for a forward P of in the 20 to 30 range, you're usually getting very good pricing. Okay, but NVIDIA's stock price has gone up so much here recently on obviously the optimism around AI, how their chips can help with artificial intelligence and those sorts of things, that their stock price has climbed substantially, and it's made the stock very, very rich at this point in time, which in my opinion makes upside at least limited over this next 12 to 24 months when it comes to NVIDIA. Do I think NVIDIA could still go up over the next 12 to 24 months? Sure, but I just think now at this point in time, gains are definitely going to be very, very limited in regards to this one. It's made its big run now at this point in time, coming off that bottom of, what was it, about $110 back in the fall time. $110, if I recall, the stock was back in it was either summer or fall time. Incredible, right? And it's climbed like a rocket ship, and a lot of shorts have bought put options on this one and try to short this stock and just have lost for months now. And they're looking at the valuation like it has to fall. At the end of the day, it doesn't really have to fall. It could also just chill out for a good time period there. Sometimes stocks just run a little too much, right? Enphase Energy. A little bit of a controversial one here, right? Forward P doesn't look that crazy, especially if you consider historically where Enphase's forward P is. This is about the lowest you're going to see it, right? In the 40s. But with Enphase, the confusing part with Enphase is their growth rates are dropping substantially now at this point in time from obviously where they were at a few years ago. Still strong growth, but you do have to kind of think if housing's hurt a little bit, does Enphase's numbers get, and obviously housing's already hurt, right? But what if it gets hurt more? You have to consider all these things, more competition coming against Enphase over the coming years. Those are all factors that have to play. And so, 41, it could be a stock that might be in an awkward transition over this next couple years, where it could actually potentially be one of those stocks that moves. And it's important to understand this. It moves from kind of the growth investors to the value investors. That could be what happens with Enphase, because this was a stock that was reporting these insane revenue growth rates, right? And anybody that's more of a growth investor is looking at an Enphase, like, I want to be in this. But if their growth rates are slowing substantially, and let's say they start growing 10%, 15% a year from now, 2 years from now, then all of a sudden, well, the growth investors start saying, oh, this isn't the Enphase I thought it was. I used to invest, I thought this was a 50% grower or a 70% grower revenues per year, right? Now it's 10%. And so nonetheless, it could ultimately morph into more of a value stock, which then you're starting to talk about forward Ps of the 20 to 30 range or something like that, right? So it's definitely a potential there. I definitely don't hate the stock, but I will say it, it could have a few problems coming forward, okay? The trade desk, definitely trading rich, right? 54 forward P on this one. Good growth at the trade desk. They've done an amazing job over this past 5 to 7 years growing that business from, a business that wasn't that good of a business, let's just call it that, to what it is today. Has been very, very impressive. 54 forward P, definitely a little rich. So that's the main kind of concern I see with that group of stocks, is just many of these stocks are trading at obviously very, very high valuations. And the good news is, though, if we do go more risk on, starting in the second quarter and going into third quarter, fourth quarter this year, if we kind of have more of a move to risk on as the year goes along, thinking the Fed's done and all those sorts of things, inflation coming down, and we get a better story here, the good news is that the valuations could push up more in these stocks, right? But it's just like you can only push it so far. That's kind of the issue there, right? Now we got to talk about big dogs, and we'll talk about overall allocation, right? This is where most of the fund's money is. Let's just call it this, right? So you got 38% there, 48%, almost 50% of the money is basically in these three things right here, okay? You got a 2-year treasury note, okay? So solid. That's just a place to hide out money. And then you got Apple, 13%, Tesla, 25%, okay? So in regards to Apple, the issue with Apple is obviously this is a stock that's pushed valuation quite substantially, right? Now, they deserve to have in my opinion, they deserve to have a P ratio higher than what the market's trading at. I think Apple's deserves that nowadays, right? Especially with the services business, the stability there, the fact that if you break your iPhone, you're going to buy another iPhone, right? Their customer retention, everything like that, right? And I think this does fit Kevin's criteria of like pricing power, right? It's like if, for people that love to buy an iPhone, like if it goes up $100 next year, people are still going to buy the iPhone. Like it doesn't make that much of a difference, right? So you do have true pricing power. But once again, this P ratio is definitely pushed on the stock. So that makes upside, in my opinion, limited And I think we're at a phase for Apple where they're going to either have small revenue shrinks or small revenue growth over this next few years. And I don't think it's going to be a very exciting story in terms of their top line story and their bottom line story unless they were to do big layoffs at the company, okay? So there are some better stocks that I think are better alternatives, in my opinion, that Kevin should consider instead of Apple stock. This is one of those stocks, okay? Amazon. I think Amazon stock is a much better play for this next 5 years than something like an Apple stock, okay? Now, you have to obviously pay about 2 times the forward P, roughly, just over 2 times the forward P for Amazon. But in my opinion, Amazon's going to grow 3x to 5x the net income growth rate minimum that Apple grows over the next years, right? So let's say Apple's going to grow net income 5% a year on average for the next 5 years. I think, bare minimum, Amazon's going to grow 15%, and it's bare minimum. Average per year for the next 5 years, 2023, 2024, 25, 26, 27. And so for that reason, I believe obviously Amazon stock will massively outperform Apple stock over this next, in my opinion, 5 years. And it won't even really be close. I think it's going to be quite a margin of difference there, okay? The other stock I think is a much better buy that also fits kind of the safety criteria and pricing power is Meta stock, right? Meta stock absolutely has pricing power, obviously. We know when it comes to, if you're going to advertise, you always got to consider Facebook and Instagram first, right? Before you consider anything else. Those are still the holy grail of advertising. Ask anybody who runs a business, right? And the great thing about Meta is you're getting this company for a forward P less than Apple, but I think Meta's going to crush Apple in terms of revenue growth and net income growth substantially, especially with, they got another layoff coming, another 10,000 employees. So I'm looking at Meta and I'm like, I'm getting a stock for cheaper, but they're going to substantially outgrow top line and bottom line, in my opinion, of this other company. I like this one a lot better. And the other thing that I think is not talked about enough in regards, and then we'll get to Tesla and overall portfolio strategy. The other thing I don't think is talked about enough in regards to Meta versus an Apple, right, if you're considering those two stocks against each other, is one has a very hungry founder at it, which is Zuckerberg. And I haven't seen him this hungry probably since, honestly, shortly after Meta went public, right, as back then it was called Facebook, right? And I haven't seen him this hungry since that time period. I listened to the conference call, and I got to say, this man sounds very sure about where this company's going over the coming years. He sounds very sure about running a more efficient company, which basically is just a way of saying we're going to be much more profitable than we have been in past years. And I think he's all about the future. And I think if you're talking about one of the only CEOs that's at a big tech company right now that's positioned to really be that continued game changer in the next 10 years, I think it's him, right? Versus Apple's got a great leadership team there, but they let's be honest, that's not the Steve Jobs Apple nowadays. This is a Tim Cook Apple. It's a different company. It should be respected. It should command a higher P than the market. This is no, if you're expecting this company to change the game, they're just not that company anymore. And so from my perspective, I just think Meta is a much, much better stock and will provide much more substantial returns over this coming year with, honestly, a very de-risked company now at this point in time. They already dealt with all the government crap over the last number of years. They already had to deal with Apple changing structure, so they, basically Meta doesn't have access to nearly as much data as they used to have. So they already had to deal with all that crap. It's in the past now at this point in time. So for that reason, I look at Meta and I think it's a much better opportunity, and I also think Amazon's a better opportunity. So now at this point in time, it's time to get into good old Tesla, my Tesla, okay? And by the way, in regards to Meta, just to be clear about this, okay, it is a stock I personally own, as I've stated many times, right? So I am talking my own book when I talk about Meta stock. Keep that in mind. But there's a reason I have my money invested in Meta versus Apple. I just think this stock's going to crush Apple over this next 5 years, okay? We could see, it could be different, okay? Tesla, my Tesla. Obviously, a pretty significant position for me personally, right? And obviously, I'm a huge believer at Tesla, have been for a long, long time. In regards to Tesla, let's talk about the forward P. I mean, it's at a 50 forward P, right? And I mean, obviously that's about a little over 2x what the market's trading at. But for a company like Tesla, right? I mean, there's a lot of things to consider here. First off, this is a company that just got to major profitability in the last few years. They're still an infant when it comes to profitability stage for this company, right? There's a company that continues to get smarter in terms of everything they do across their business, right? It's a company that has proven the ability to grow 40, 50% a year, right? And maybe they don't grow that over the next year, but I wouldn't be surprised if they get back to that growth rate, especially when you talk about Cybertruck coming in. They're going to start producing it obviously this year, right? But in terms of mass production next year, Model 2 coming, who knows, maybe 2024, 2025, something like that. That's their next like huge volume vehicle, like even bigger than the Model 3, right? And that's a real robo-taxi opportunity as well. And obviously Elon and the team, they just continue to innovate, and they've got one of the most impressive innovation teams that you're going to find of any public company out there, right? And so for that reason, are you willing to pay a 50 forward P for that company? For that sort of company, I am willing to pay a 50 forward P. So I like Tesla. I didn't love Tesla when it was $1 trillion plus valuation a couple of years ago, because for where that company was at that moment versus where the valuation of that company was at, it was too high, right? It needed to come down. It needed to play catch up with the business model, right? We've caught up with the business model. Meanwhile, the valuations come down considerably. And so that's why I actually think Tesla's still a great buy for long-term investors here. For the first time in many, many years, right? I hadn't bought Tesla for a long time. I had actually been a seller of Tesla for years, right? Because the valuation climbed so much. But that all changed going into this year. I'm actually welcome to buy this stock. I'll probably buy shares of this stock, honestly, in the second quarter of this year. And I already bought some shares this year for the first time in a long flip and flapjacking time since, I think, 2019. So I actually think the stock's a good buy here, okay? Now, let's talk about this. In all seriousness, he has 14 stocks, only 14. That's not very many for an ETF. But I'll say a couple things. One, I appreciate the fact that he's not over diversified, because what I see a lot of ETFs out there that are positioned in 50 stocks, 100 stocks, 150 stocks, 200 stocks. And it's like, what is the point? Like, what is the point if you're that diversified, whether it's a fund or an ETF, whatever it is, right? It's like at that point in time, you might as well just buy the S&P 500 at that point in time, right? I say he's probably a little under diversified for the size of the ETF. He should probably be positioned in about 25 stocks in my personal opinion, versus 14 stocks. So I think he's probably a little under diversified. I think 14 stocks is perfectly fine. If this was just Kevin's personal money, right? I think 14 stocks is perfectly fine for most people probably watching this video right now for your portfolio. But for an ETF, I think probably 25 stocks would be about fair. But like I said, I appreciate the fact that he's not like in 100 and something positions like some of these folks are, because at some point in time, it just gets a little ridiculous in regards to all that, man. It's like, at that point in time, just buy the S&P 500. So anyways, love to hear your guys' opinion on this. As always, if you're looking to join us in the Patreon, that will be pinned comment down there to see the moves I'm making. And if you want me to do this on Warren Buffett or just fund managers, hedge fund managers, let me know who you would like me to break down their portfolio of. If it's other YouTubers also, I'm always happy to do that. If there's anybody that publicly discloses their portfolios, always happy to do that. So just let me know in the comment section. I can make that happen for you guys in the future. I appreciate everybody. Subscribe to the channel and have a great day.